Well, hello traders and investors. Welcome to the weekly recap of the markets right here at Wealthtown, where we build and protect wealth. With me, Nova PM. And let's just go over the topics for today. We got the market recap, weekly market recap. We're going to go all on the indices, major indices, and also gold, oil, and crypto, of course. Top earnings. We had a couple of earnings last week, some special ones like NVIDIA. And of course, we're also going to go over upcoming earnings next week and my top stock trades that I did, stock and options trades, why I did them, how I did them, what was the setup, everything and much, much more right here at Wealthtown. Let's check out this heat map, which was actually green at the end of the Friday session, with major indices like the S&P 500 going down for the entire week, 1.04%, actually closing up in the positive at the end of the day. But just take a look at this chart at the S&P 500, how it hit that 100-day moving average and bounced back from it. Now, this is the Friday closing candle on the 21st of November. Now, we got a little bit of a problem here. We are between two major moving averages. If we do a Fibonacci retracement, this wasn't even a 23% retracement. So could this go even further, this retraction in the markets? It could. It definitely could. Let's take a look also at the NASDAQ, which again held that 100-day moving average like a hero. Underneath of it, the 200-day moving average. Hopefully, we're not going to see this until somewhere in the next year. Now, let's take a look at the Dow Jones, also held at 100-day moving average, closing up at 462, and the Russell 2000 reached the 100-day moving average just above the 200-day, held and bounced back above its 100-day moving average. So all of the indices closed in the green last week. Now, let's see what this week will happen. I kind of feel that we're going to get a technical bounce back, but I don't know if this is the end of it. Let's also take a look at oil. Oil currently still selling off. We are in the Monday edition. Of course, I missed the weekend edition. This was actually normally the weekend edition. You know, I always do this on the weekends. This time I was on Saturday at a mixed martial arts fight. So that took up all of my Saturday. And then I came back like at the next day. I was extremely tired. We drew for the entire night, but great fights. We saw a couple of great fights in Munich, Germany. It was awesome. Had some time off, well-deserved time off. But don't worry, I'm not forgetting you. I am doing this weekend edition before the market opens on Monday, so you can definitely check this one out. But actually, I think I'm not. Yes, I am going to release it before the market opens. I'm going to manage it somehow. Okay, let's move on to. I will finish with gold, oil. Well, not quite. Oil sold off Monday. It's still selling off, which is just perfect. Waiting down here for a next level of resistance, which is still this 50 and 57.54 region. I don't think it's going to breach 55. Let's just see what will happen. Now, this is probably a buying opportunity and a bounce back from oil from these levels right here. Also, moving on to gold. Gold held like a hero on its 20-day moving average. As I said, gold is going to bounce around here. You want to do some strangles on gold. Perfect setup for those. Right now, perfect setup. Actually, today is the most perfect setup because I don't think that it's going to go over 4,020 in the next couple of days or weeks. And I don't think it's going to go and touch its 100-day moving average in the next couple of days or weeks. So definitely try out the 4,400 and 3,700 move there on gold. Somewhere between there is where the gold price will stay, I believe. If not, then we have other problems to worry about. But because when gold will sell off, and it will sell off, then we have other problems to worry about. Silver, moving on to silver, which is also on its 25-day moving average. Again, I don't think it's going to breach 55 in the next couple of days or weeks. And I don't think it's going to breach to the downside the 44 levels. Copper, I don't know what to say about copper. It's bouncing around here. I think this is going to also do a beautiful, beautiful swing to the upside. Just wait until that leg comes. If you want to just accumulate some copper here for a trade, this is going to be a great opportunity, I would say. Now, let's go to the dollar, which I think it's the best trade of all times. Again, if it comes down to the 25 moving average, which is currently sitting at $99, then this is, again, a buying opportunity. Everything that is between the 20-day and right now the 50-day moving average, it's a buying opportunity for dollar for its next leg up. But it's going to take a while, okay? So probably we're not going to see something like this, but it's going to take a while. Again, the Fed needs to cut some rates. Now moving on to the Dixie, to the VIX, not the Dixie. We just had the Dixie. So let's just see what will happen here. Currently, we are in a retraction of the VIX. The VIX is cooling down. It's down to 23, somewhere up there. 28 was its last peak. Now we peaked at 28.24. The candle came down, the green candle, to 26, and now it's currently at 23. Be cautious. I don't know if this is over because all of the moving averages are pointing higher and higher. So are we going to see some more volatility? Well, the chances are high. Be very, very careful in the markets. Be careful with your allocation. We are currently looking for a rebound, just technical rebound. If you want to take some edge, if you want to take down the edge from your trades, that this will be the best possibility, probably. I still feel we're going to have a little bit more pullback. If not this week, then maybe the week after this, or in the first 2 weeks of December. And after that, we're going to set up ourselves for a beautiful Santa Claus rally. What's going to happen after that? I don't know. Too far away for me to see. Now, moving on to Bitcoin. Bitcoin found, exactly as I said, its support in the early April 2025. So this April's bottom. Retesting that bottom, held beautifully. It's trying to get up, go towards its 25-day moving average. Let's let it run here and do a retest, and then we know if this entire retraction in the market is done. Okay, so that's it for the major indices. Now we're going to do a rundown of the earnings that we had last week. So major earnings in Home Depot, Target, Palo Alto Networks, NVIDIA, Walmart, and Bull. So let's go over them, starting with the biggest one. NVIDIA reported their earnings, had beautiful earnings coming out there with $57 billion, up 62%. Year to year. Data center revenue 51%. I did a complete rundown of their earnings, so please check that one out. It's a previous video. I'm not going to go far too deep into this earnings. The gist of it is NVIDIA reported, NVIDIA beat earnings, and NVIDIA came down like a mother lover here. Take a look. Earnings day 19th of November. Next day, so kept up, then gave back everything. Gave back everything that it had. The next day after that had a retraction of 7%, something like that, and then the day after that another one, and Friday came underneath its 100-day moving average but ended above it, still in the red but slightly above it. So great buying opportunity for NVIDIA. If you didn't buy on the Friday session, I would wait. Okay, so let's just wait. Let's see what NVIDIA does. We still have, it's not over. You're not missing anything. For long-term investors, this price consolidation here is just perfect. Want to add something to long-term investing, please feel free to do so. I'm not a financial advisor. Maybe I don't know anything that I'm talking about. But what I do know is that I am cautious with my allocations in the next couple of days. Okay, now let's move on to Target. Target again reporting their earnings. Now they're down on the week 2.63%, but kept up on the Friday session. Go to the super chart here. Well, underneath their 20-day, 25-day moving average. Everything is just awful right now for Target, but it did report good-ish earnings, beat on earnings, failed on revenue, 0.2% down on their revenue. Well, what can we say? Q3 net sales, $25 billion, down 1.5% year to year. Adjusted EPS 1.78 versus prior year of 1.85. Comparable sales down 2.7% overall. Digital comps, sorry about that, had something in my throat. Target's earnings, that is, grew 2.4%. Gross margin 28% versus 28.3% prior year. Operating income margin 3.8% versus 4.6%. So guidance for Q4, expect a low single-digit decline in sales, which is not that bad. So full year GAAP EPS approximately 7.7, between 7.7 and 8.7 dollars a share. So approximately between $7 and $8 a share. Short management commentary. The CEO Michael Fidelki highlighted efforts to solidify merchandising authority, elevate shopping experience, and harness technology. Now, what they are all doing here is actually waiting for that AI trade to kick in to see really some returns from AI, because they're also implementing AI. So for short term, hold if you have this stock. For long term, hold, I don't know, maybe even buy a bit. I wouldn't add right now to Home Depot. Coming down from its previous all-time highs in 2021, $268 a share, to now now $87 a share, yielding a magnificent 5.13 dividends. So you want to add it to a dividend list, feel free to do so, to a dividend portfolio. I would not do it right here. Still wait. Still has down here in its between the 60 and 80. I would wait until it comes down there. Because you know what? The AI trade is not done. And still until that AI trade is not done, people are still going to invest in AI. Speaking of technology, let's move on to the next one, which is Palo Alto Networks. Down in the week 9.45% after they reported their earnings, which was good. They actually reported a Q1 fiscal 2026 results ended in October, revenue approximately 2.47 billion, up 15.7%. Why is this stock selling off? I don't know. But let's keep looking at it. Keep digging deeper into it. Management commentary announced acquisition of observability platform Chronosphere. What a name. 3.35 billion deal. So that's kind of coming out of their earnings. Future outlook and key watch items for this company, especially what I'm looking for, is execution integration risk from large acquisitions, because they did purchase something here that has to yield some profits. So come on, Palo Alto Networks, show us what you can do. We need to also watch booking growth, cloud and security, and margin impact on that, and also their macro outlook, which is corporate cybersecurity budget remains. If the corporate cybersecurity budget remains robust, cloud security is a structural tailwind here. So short term, definitely hold this. Don't sell Palo Alto Network, because they have decent growth, but acquisitions adds to their complexity. You know how this is. Procter & Gamble bought everything that there is, from Pampers to Gillette. Everybody needs it, but it can't grow anymore. Okay, how much can you innovate in Pampers? Had two small children that were using Pampers. That's it. Pampers is the lever. Actually, if they take somehow the pee and convert it into drinkable water, only then I think they're going to get the next leg up there. And I'm meaning Pampers, so Procter & Gamble, because they own Pampers. Now, long term, Palo Alto Network, it's a buy right here. Woo! Check out that stock. Just check out that stock price. Still, it's red zone, which is now kind of, if it's going to go up here, could be the next support level, but it's currently in its resistance level from here. I think it's going to have a little bit hard time coming out of it. Let's give it a couple of days. Let's see if this is over. Take a look at its previous retracements. It always had, let's do another retracement here, Fibonacci retracement, because we love the Fibonacci retracements. It's currently at a 60, yep, it's in its almost 78% retracement, which is perfect. Just perfect for long-term holders. Now, they don't yield any dividends, so if you are buying them, if you're buying Palo Alto Network right here, you need to hold on to it. Okay, this could take another earnings report in order for this stock to go up. So 3 to 6 months should be your investment horizon, if not even more. Well, but actually, if you're investing, you should have years as horizon depending on the stock, between 3 and 5 years. But this stock, I would say, between 1 and 3 years, but for this stock it's 3 and 5 years. Just, I don't see any kind of future consolidation happening here, although bouncing around here. So I would say 3 years, because it's still expecting 2028 much of this AI play to kind of lose its tail. There will be a time where investors will ask from the companies to show their returns, and I believe that is going to be 2028. When exactly, I don't know. Come on, don't have the crystal ball, but that's my hunch. Okay, moving on to the next one, which is Walmart. They reported exceptionally good earnings. As always, Walmart growing there, went up on its earnings report, came down. So they had a standardized 0.77 billion earnings, revenue report, dollars per share, sorry about that, $0.77 per share, reported a almost 180 billion, which is a 1.6%, 16% beat. Also, the revenue was a 3.18% beat. Right now, don't sell your shares. I would say this is a hold, long-term investing. If it comes down, I will wait for this. So actually, the buying opportunity was down here in the 100-day moving average. I wouldn't be adding right now to Walmart, although we know how Walmart is. So if it comes down to its 25-day moving average, you could add some. That should pinch there, a smidge of Walmart. It's not that expensive of a stock. What actually means expensive, how much shares can you buy? You can also buy fractional shares. Just take a look at Netflix. They had now a 1 to 10 stock split, and now from $1,110 a share is now at $110 a share. $1,100 to $110. So their price is not really a reflection of a reflection of the value of if you should buy it or not right here. It's more or less what are the future. And so if you want to hold something for a long time, then you need to do some fundamental analysis. Okay, the technical analysis is also good for entering and risk management, but the fundamental analysis is definitely the way to go for the long-term investing. Moving on to bull. If you're bullish on the markets, then you need to know about bull, because bull just reported earnings. They're down on the 5 days, so on the last week, 5.47%. Go to the super chart here and take a look at this. Up and the all-time highs, $81 a share. Now looking down here, we need to zoom in order to see this. Down at 8 point, what a haircut, 90% haircut on bull right here. So reported surprisingly 0.053 earnings, and that is 320% up from the expectations of the market. Now let's be honest with bull here. If you want to just allocate $100 or $1,000 to the stock and forget about it for the next 5 years, you could do so. Because in the worst case, you either lose whatever you allocated to it. Okay. In the best case scenario, you're going to have a handbagger, and that is within the realm of possibilities, but not tomorrow, not the next week. You will need to wait for it. So good earnings report, but the margin commentary shows that caution despite beat. The stock has endured technical weakness and high volatility. So definitely keep an eye on volatility when you're buying this stock. Don't just jump in and out of it. Let it sit there like good wine. It needs its time. Future outlook and key factor to watch for in the stock if you want to invest in it, then I would say monetization of premium offerings, regulatory risks as always, and how macro risk impact the trading volumes. So this is a fintech company. Fintech are sensitive to market volumes, interest rates, and investor sentiment. So interest rates come down. This could hurt Webull, but we do know that interest rates will come down, meaning it's maybe already in the price. So definitely, if you have the stock, haven't sold it yet, hold on to it. And if you want to add to it at the current price level, I cannot tell you if that is right or wrong. I can only say if you believe in the stock, then add to it. If not, then if you already have it, hold on to it. If this is a new position for you and you're willing to lose all of your money, then feel free to do so. No one can see the future. In my opinion, this stock has some future in the long term. I don't think this is going to be, let's just say, the next big fintech company out there, because there's so many things that, you know what? I'm going to tell you something that Steve Eisman says. Each of these companies are trying to beat Visa and Mastercard. And at the end of the day, each of them will fail. That's my opinion. Okay? Because they don't have the infrastructure. Also, Mastercard is preparing. There's something wonderful. I'm going to do a deep dive on Mastercard. Do not think that these companies will beat Visa and Mastercard. Will there be big possibilities in this stock? Will this stock explode in price and everybody will speculate in it? Of course. But in the long term, they are going to be bought out, merge with somebody, or just disappear. Okay? I'm the believer that Mastercard and Visa, because of the infrastructure that they already have, are the winners of payment system. Okay. Now let's move on and let's take a look at one last thing. Home Depot. I just want to add a short comment here. So earnings were not that good. Commentary was also not that good. They reported a $3.6 per share earning, which is a miss of 2.46%. Expected was 3.83. Their revenue was a beat, expecting 41.17. They reported 41.35, so 0.46% beat there. They're also going to have their dividends, ex-dividend date on the 4th of December. So you need to buy the stock before the 4th of December. On the Friday session, it went up, and it mostly went up because all of the defensive stocks went up. Due to the fact that it has a 2.67% dividend yield there, the stock is a woo-woo. So be very careful when you're buying Home Depot. It's great stock. Don't get me wrong. If you take a look at, go back here, take a look at 5 years, 26% up, all-time 977% back from the 1982 years, so 1982s. But this is not a growth stop. So if you just want to have something really secure there in the portfolio, also let's just take a look once again at the super chart. You can just draw a line here and say that this moment right here is where it is a buying opportunity. For a long time, dividend growing, secure, not going to collapse company. Okay, the next leg up is probably after rate cuts, after people can invest once more in homes. Home prices need to come down, and only then we're going to see the next leg up in Home Depot. But if it comes, then you're looking for a roughly, so if it hits its new peak and newer peaks, let's say until of the end of next year. So if you invested right now, we are in November and looking to get out of this stock in the next 1 year, you're looking for a 34%, let's just say 35% return on your investment. 1 year, I would say, thank you for the flowers, let's have it. But I don't know if it's going to come to fruition. So let's just move on now to upcoming earnings. Next week, we have on Monday a definitely interesting company, Zoom. Zoom is going to report earnings on Monday. We also have Symbiotic here. Both of them are after the bell. Now, before the bell on Tuesday, we have Dick's Sporting Goods. This is interesting. I would say Dick's Sporting Goods would be a much better investment than Nike, but I think Nike is going to turn around. Now, this is before the bell and after the bell. We have Dell, which I would stay away from it for the moment. Then we have HP and Autodesk. Now, me being an engineer, love Autodesk. What a great company. I would love to see it enhanced by AI, but I think it's already in the stock. It just had a beautiful pullback here. I was thinking about adding some shares here, but the upside is, well, from 290 to let's say 300-ish, I would sell then the stock. So a small trade here, returning, let's say a $30-ish per share. They buy 10 shares, that will be $22,000 or $2,900, and return of it would be, it will be 10%. So if even more, 11, 12%, something like that, a $300, I believe, in roughly 3 months. Because I don't think that this is it for Autodesk. Just a nice little correction here, and Autodesk going to have its next leg up. Okay, then we also have Deere reporting earnings on Wednesday, and that's pretty much it. We are down with earnings for this year, actually. So let's move on now to trades. What trades did I do this week? So we're currently sitting on the month of November with a positive 1,461 net profit. Net is after taxes, after everything. So we're now going to go over stock trades, and then we're going to go over options trade in the month of November, in the week of 4D7. Let's see here. First trade that we did is not even a trade, it's actually a dividend. We received some dividends from Procter & Gamble, ticker symbol PG. This is div, and we received it on Monday, a 66.23 on Procter & Gamble. Then on Tuesday, on the 18th, sold Kinder and Morgan. This is a gas company. And I'm also looking to reinvest in it. Just saw this. We're going to take a look at that diagram just in a couple of seconds. And I'm going to explain why I did this. $40, euros, sorry. Converted in dollars, that would be a net profit of $33.84 net profit. Okay, now let's take a look at Kinder Morgan, ticker symbol KMI. Now, just look at it. It's trying here, it's doing a consolidation of the price. Do I think this is go even higher? Yes, but I'm going to let it go higher, then come back down again. And I don't know if right now is the time. I think that somewhere in the next year will be the time to build a really, really robust energy portfolio. Gas, oil, solar, refineries, drillers. So those that do the service with. I'm going to go over the portfolio. I'm going to create a portfolio and do a special video only on energy portfolio, from nuclear to oil, gas, from turbines to everything. So everybody that is in that, for coolers also. There are a couple of companies who only do the cooling for the data centers. So that is a portfolio that will, first of all, have huge dividends if you do it correctly. And then second of all, I think it's going to have a really nice leg up in the next 3 years. But it could also take a while. So you could see a negative on the portfolio for 1 year until it really happens. Now we're going to come into that bit later on. So that's it. Kinder Morgan sold it, did a little profit trade there, looking to reinvest in it later on. And then I sold Apple. Only one share. Okay, sold only one share on the 18th, bringing in 81.41, and that is gross. Net would be $49.44, and then sold my gold trade. Gold, shares physical gold, and this was also on the 18th. And after that, gold took a little bit of a dip, so made on this 34.40 euros, and that is a net profit of 29.10 cents, and that's in dollars. And that's it. That's all of my trades in the stock portfolio. Now, in the options portfolio, on the other hand, did a couple of trades. So let's just see week 47 in November ended in a net profit of 146 euros, and that is $168. With the dollar, as I showed you, getting up there, so we are at 1.15 euros a dollar. What a change from the beginning of the year. Now, looking, by the way, on the gold trade, I'm looking to add back to this trade. As I showed you in the beginning, gold just hit that 25 moving average. That could be a good opportunity, I would say. All right, now on the options trade, let's start off with the very first one, which was OSCR Health. I had a short put on it, was assigned, and then I obviously sold calls against it. Now, this was really interesting. Sold one call, the market went down. So let's just see here. Right here, sold a call against the option, the 18 call. The market went down. So I started to take profit on the call, and I rolled it downwards to the 16. So got myself 21 cents, which is then multiplied by 100, and then basically closing that call, yielding in $22. Now, I still have another one open. So let's see how this will run in this week. The next one was NVIDIA. I already told you that I want to play NVIDIA last week. So let's just go here, to the 7th. So I have this calendar open, bought in the 27th of January, and I'm selling against it calls. So this is why you see this negative here, because this is depending on the stock price. So sold a call, the 200 strike price, closed it, then brought in $9, sold another call. This was on the 20th. So opened the first call on the 18th. This is on Tuesday. Closed it on the 19th. On Wednesday, got myself $9. Opened another one on Thursday then, and closed it on Thursday, bringing in $33, and opened another one also on Thursday. So I did a day trade there, and then closed that one up, bringing in $71. Opened another one, and this is still open, and currently down $12 on that trade. So brought in on NVIDIA $113. Let's go to TLT. TLT, I made a mistake, but that's the way the cookie crumbles. Also trying to turn up here, having some resistance, TLT. So MACD is trying to turn around, trying to trigger a buy signal here. RSI pointing upwards at the 47 levels. MACD, the TLT currently hitting its head on the 50 and the 25 moving average. This is what I did. Had a short put option open on it, and sadly, well, after I rolled it, closed it up at a loss of $65. I'm also going to do a summary on how much I earned then in options last week. And that's it for TLT. Still looking at TLT, beautiful setup here. If it comes down again, hits that, I would say just sell puts at the Bollinger Band here at 87, just sell puts. The perfect trade setup, because this is going to go upwards. I would even risk the 89 if that is free. But I'm going to come into this on the Monday before the bell session. Okay, let's move on to the next trade, which was Netflix, NFLX. So I have a calendar open on it. I'm selling against it. So sold the call on the 19th of December for 1.1 and bought it back for 0.74. So remember, when you're selling something for a credit, you need to buy it back for a debit, and the buyback needs to be smaller than the credit in order to remain with the money. So I brought in $36 on that trade. Next up is the IBIT ETF, which is IBIT, the Bitcoin ETF, IBIT. So had a really good day on this. So I have opened this up from the 13th, so the week prior to that, and closed it on the 19th of December, brought in $47. Then open another one on the 20th of November, closed it the next day, brought in $39, and still have one more open. This is currently in the negative, but I think this is going to go in the negative because Bitcoin is going upwards and I'm selling calls here. So currently brought in $86 there on Netflix, and now to one gold trade on GDX. This is the gold miners. I made a mistake here, as you can see, sold it, the put far too early. I was thinking it's going to go even further down, and I was kind of a pickle there. Couldn't really manage it as I wanted. Also, I saw the MACD turning around here, turning down into a sell signal. I still think I made the right move here, but who knows? So close this up in a loss of $98. But at the end of the day, with all of the selling, all of the plus and minuses, I did come in at $94 the last week. So that combined with my $168, resulting in a $275 for the last week, which is underneath the $500 that is my target. But hey, the month of November is not over, and I have some beautiful trades set up there for the next week or the week after that. Okay, with this being said, thank you so much for watching. This was Wealth Time. I'm Norbert PM, or Norbert Menhart, where on this channel I build and protect wealth. Want to follow along, then feel free to do so. Like this video, subscribe to the channel, click that notification bell. To get notified whenever I post a new video. I post from Mondays to Fridays, especially before the Bella edition. So see you on Monday. Take care. Bye-bye.